Anyways, so yes, this question came in from another client, Tom. He's actually from Saskatoon. Go Saskatchewan. And he says, I would like you to discuss Ametek Inc. I actually reviewed the stock for Tom during one of our US chat sessions, and it screened well. So he wanted me to go over it a little bit more in depth on the podcast. So Ametek Inc., AME, on the New York Stock Exchange, currently trading at a price of about $162, a market cap of $37 billion, and it pays a slight dividend yield of about 0.6%. So the company manufactures and sells electronic instruments and electromechanical devices in North America, Europe, Asia, and South America. So the company operates in two segments. The first, it's electronic instruments, or EIG segment, and then its second is the electromechanical group, or EMG. So the company's electronic instruments segment offers advanced analytical, test and measurement, instrumentation, and mission critical communications solutions. And its electromechanical segment offers automation and precision motion control solutions, as well as highly engineered electrical interconnects, specialty metals, and thermal management solutions. So the company has been an aggressive acquirer, having deployed just under $7 billion on 36 acquisitions since 2014. And the most recent acquisition was for Paragon Medical, which provides engineered medical devices, components, and instruments. And the acquisition was just closed on December 8th for an all-cash transaction valued at approximately $1.9 billion, with annual sales of approximately $500 million. So it is a significant acquisition for the company, larger than we've seen in several years. Now, moving over to the actual financial results. So this is for Q3 of 2023. So revenues were $1.62 billion, an increase of 5% over the third quarter of 2022. Organic growth here for the quarter was flat, but acquisitions added about 4% growth, and positive foreign exchange added about 1%. Now, GAAP EPS was $1.48 per share, up 14% year over year, and adjusted EPS was about $1.64 per share, up 13% year over year. And if looking at the balance sheet, not including the most recent acquisition, as we would only be speculating on the pro forma balance sheet, as at September 30th, 2023, Ametek had a net debt of about $1.3 billion and a trailing net debt to EBITDA multiple of 0.7 times, which is reasonable. And looking at the valuations, the business trades at around 26 times GAAP EPS, 25 times forward adjusted earnings, and with an EV to cash flow multiple of about 24 times. And just for some perspective here, over the past 5 years, the median trailing PE was about 28 times for the company. So during Q3, management recently revised their fiscal year 2023 adjusted EPS guidance upward from a midpoint of $6.22 per share now to $6.32. And this would represent growth of about 11% compared to last year's results. And management also indicated that they ended Q3 with a very strong backlog of $3.4 billion. This is near record levels. And although it is down a modest 2% sequentially, it is up 5% from Q3 of 2022 and up 23% from the end of 2021. So to conclude here, Ametek is a diverse business focused on niche markets driven by several secular growth trends, including automation and manufacturing, energy production and supply, aerospace and defense, and medical and healthcare. The company has produced strong growth in revenue and earnings, but it has been primarily driven by acquisitions funded through strong cash flow generation. Now, the company pays a slight yield of 0.6%, but they have produced strong dividend growth of 12% over the past 5 years. So it's nice to see that they've been growing that. So, investors who bought it 5 years ago, their effective yield would be much higher than that 0.6%. Like I said, management did revise their fiscal year 2023 guidance upward in Q3, and they also indicated that they maintain a robust backlog, which remains near all-time highs, which bodes well for continued growth here. Now, with a valuation of 25 times forward earnings, in my opinion, this places the business near fair value, given its low double-digit adjusted EPS growth, and we're looking at about single-digit organic revenue growth right now. The balance sheet remains healthy, but like I said, it will change in the next few quarters because of the Paragon Medical acquisition. So overall, I think that over the long term, as long as Ametek continues to execute as it has historically, the business and share price should continue to perform well into the future. However, the Paragon acquisition is quite significant, so it will be interesting to see how the balance sheet and leverage ratios will look going forward. They gave us, that the company was doing 500 million in revenue, but we had no other color than that. So it'll be interesting to see the margin profile there, and if it changes anything at all. But yeah, Amtech, I think it's an interesting business. There's no doubt.
I'd agree with
But
the
you,
conclusion.
yeah,
I'd say fair value, given the growth rate, given the valuation. An acquisition that size, it can be great for the company. It also takes risks.
Yeah.
They take on risk doing a deal that size with integration. So if things don't work out the way they had expected, there could be activity on the downside. But it's definitely an interesting business.